There we go. I got the recording started, and we are going. Folks, please save any questions for stocks you want us to review until for a little bit until we are ready to be doing the question and answer period. So here we go. This is Dennis Wilburn with the Active Trend Traders, and we have David Grandy joining us. He's down in San Jose. Today I'm remote. I am up in Nevada with my son, daughter-in-law, and granddaughter. We're going to be celebrating my birthday, which is tomorrow, celebrating that today. He's taking me to go play golf this afternoon. David, what do you think about that?
I think that's great. I did the same thing with my father last week for the same occasion, so it's always a good treat.
You know, the market has been absolutely, I don't know what adjective to specifically use for it, David. It's been very interesting. I know that in your guys' trading style and also mine, I'm waiting in order to get into some of these, leverage ETFs, but also some of the good stocks. I'm waiting for the dadgum, controlled pullback so that we can bounce off a moving average and go. But right now, we're not getting a lot of that, or we're getting too much of it, as we've seen in a couple of stocks that have fallen out of grace here lately. I want to remind everybody that all the materials that we do present are for training purposes only. Traders should paper trade any new method prior to risking your own capital. I want to remind everybody that Dave and I love to talk about stocks. We have this absolutely fantastic presentation called The Art of Trend Trading, where we pull together a lot of different aspects of trend trading, and we would love to present to your group if you have a group, and we can present basically anywhere because we can do it via webinar too, right, David?
That's right.
I'm lined up to do a presentation to the Delaware IBD meetup group on the 18th of November. I'm very excited about that. And David and I have also presented to a few groups around the Bay Area. But we just love to talk about stocks. And so if you are looking for a presenter, please keep us in mind. And I want to remind everybody that, David, they finally have our bios and our pictures up on the information for the World Money Show that's coming up on the 5th through the 7th of February.
Yep.
And the I'm reading the notes here, guys. I will get back to the questions. One of the things, David, while we're going to be down there, if there's anybody who's listening or anybody who watches this video this weekend, and you are down in the Orlando area and you belong to a group, David and I are going to be there, the 5th, the 6th, and I don't know how long you're going to stay down there, Dave. A couple of days?
Not sure yet. Depends on when we get scheduled.
Okay. But we would love to, while we're down enjoying the good Florida weather, we would love to be able to come in and present to your group. So if you are looking for a presenter, please let us know. So let's get going with what's going on last week. Yeah, Chelsea, if you'll hold your comments on any specific stock until we're about 20 minutes from now, and then start shooting them in, we'll be able to discuss those. Okay? Let's see. Last week, where we were, Dave, was basically down here. We had a continuation gap, or was it an exhaustion gap? Those were the questions we were asking ourselves, and we also were wondering about how much and what was going to be the effect of QE going away, which the Bank of Japan answered that last Friday. Ignoring mediocre reports, and then the elections and earnings, those were cumulative going into this week. What have we seen this week? Is what we're seeing in the market, question, is it staying power or is it a temporary top? That's one of the things I'm asking myself as I get ready for the review for the weekend. The S&P has broken out to new highs for the year. The NASDAQ, however, has not. The NASDAQ and the Russell basically have reached a level of resistance and appear to be stalling a bit. And we'll see that more when we go in and take a look at the individual charts for the indexes. Then outside and earning influences, of course, we had the elections. We got a little bit of a bump after the election, with probably a lot of business people thinking that the results of the elections would be more positive towards economic growth in the United States. And also some of the things we've discussed in the past, David, is that that aspect of global investors. The United States stock market is still and is primarily the most stable of any through the world. Europe is worried about their economy shrinking. And then the other aspect is, have you given much consideration, Dave, that what we're seeing in economic growth in the United States is a lot due to the expansions in our ability in the United States to find more oil and get it out of the ground?
Yep.
You have? Good. So have I. I mean, it's pretty amazing when you think about it, because this is a picture that was taken in the Gulf of Mexico. My son works on this ship. He is the chief mate, and he will soon be a captain of a ship just like this, an oil drill ship out in the Gulf. And I love this picture because it looks like the ship has an afterburner back here. But actually what's happening is they're venting or venting the methane gas from the well down below. Okay, David, can't see the slides, okay. Are you seeing the slides pass through, David?
I'm on your disclaimer. That's what I see.
Okay, well, let me open this up. What do you see now?
I see oil-driven recovery.
Okay. And is everybody else seeing that also? Okay, thank you. Yeah, I'm working from one screen today. That's one of the challenging parts usually when we do the presentations. The slide that we had just prior to that was this slide that talked about this week is a staying power or temporary top. I'll leave that up for a second when you review it. Thanks for bringing that to my attention, guys. Usually I work off of two screens, and so the one screen. But anyway, back to the issue is this is my son's ship. It was taken on the 2nd of November out in the Gulf of Mexico. Gas prices around the United States have in some places dropped to below $3, David. So that's about $1 plus worth of spending power that is back in the consumer's pocket. At these, and do you remember what the average cost of price of gas was for just regular gas 6 years ago?
I don't.
It was $1.89 average throughout the United States. And so this week, I know I've seen gas even in the Bay Area starting to creep down towards, $3 for regular gas. Well, what this does is, at its current level, this puts about an extra $700 of cash back into the consumer's pocket on a yearly basis. And so this could be some of the other things, those things we don't think about that are actually driving the market a little bit, because we're, many economists and many of us traders are sitting and looking at this market going, what in the heck is holding it up? This could be part of it. And if the consumer has an extra $700, it could be a really, really good Christmas. You know what I'm saying? So here we go with where we are sitting right now. What we had going on, and can everybody see this? Is the percentage of stocks above the 20-day moving average? I like to show this. Can you see this? Yes. Okay. Excellent. What we've got going on here is, as we saw, we basically peaked above this line, the 80 line, and this is usually the upper reversal zone, but it doesn't have, in the upper level, it doesn't have quite as much power as these when it drops below the 25%, where it means 25% of the stocks on the NYSE are below their 20-day moving average. And we've seen this very powerful and fast rebound, and now it's kind of just sitting there. Where's it going to go from here? Is it going to pull back down? Thus showing that, if we lose this resistance here at about 70 or 75-ish, we could drop significantly. When I took the snapshot, it was sitting at about 75.5 for the weekend. And oftentimes these tops are precursors to at least a slowing in the market. And so that's what we may be seeing right now, because as you can tell from the S&P, that the actual momentum in the market has slowed somewhat. Take a real quick look. So let's talk about the S&P. What do we have going? On the left-hand side is the daily chart. On the right-hand side is the weekly chart. As we can see, we have, in fact, topped out above and broken out to new highs on the S&P. And now the question is even with this rapid increase, will these new highs hold? Or are we, it appears that, one, the momentum is easing off and going down. I drew this in from our Wednesday night session, and this negative divergence on the true strength indicator, and even a little bit of divergence here on the stochastics, while this is making new highs, could be pointing us towards, hey, we may be getting ready for a pullback. But how much of a pullback? David, I know you guys would love to see a pullback, and I would love to see a pullback that would be something like this, that would basically stop here, come back to one of the more significant moving average, or maybe back to this level of support here, and then a bounce to move higher, because that would give a lot of people an opportunity to get into a trade with the, and also since 60 to 70% of the stocks out there in the market follow the index, that would give us an opportunity for a lot of great setups on stocks. Don't you agree?
Absolutely.
And so let's see what we're looking like in the NASDAQ. As you'll see with the NASDAQ, it has gotten a little bit flatter than it has gone up. It's still working within, it's expanded this expanding top that we've been watching for several months now. We actually broke out the bottom of it, came bursting back up through it. This is really a very good bullish sign. But the rapidity of the run from the low on October 15th up to the high here at the first part of November has been at least exuberant. I won't necessarily, like I said, it's a hard market to choose your adjectives to be able to define them. What we have going on here on a daily chart, though, is we have a lot of either small-bodied, doji, bearish engulfing, hanging man. It could be indicative of this is basically putting in a top right here. And as I mentioned on Wednesday night, it looks like this could be a really nice setup for what would be called an island top, especially if we get some kind of bad news and we get a gap down open below this 41.18 level. That would put in an island top, which is typically a bearish indicator that we are going lower considerably. But again, we're back into the same thing with the NASDAQ that we are with the S&P. Now, one of the other things that could be happening here is we could basically just go sideways until the overbought condition is done. And so right now it's looking like that's the path. Maybe the path of least resistance is just to move sideways. But with the market has shown over this past year, it's been very news driven, and the news driven markets tend to be volatile, and so volatility is at back down to its support level, and so volatility could bounce and spike up. Russell looks a heck of a lot like the NASDAQ. We've got a couple of things going on here. We've got the, don't do that, we've got the, we have the, there we go. Okay, the momentum coming off. We've got the TSI up in the upper reversal area. Again, it actually broke out a little bit on a weekly basis, but we may be getting one of those where it peaks its head above, and as long as it does, the TSI on the weekly basis doesn't get back above this level, this could turn out to be a weekly doji / spinning top, which could say, hey, my momentum has really slowed down and I may be turning back over at this level of resistance. How far might we go? Well, again, you've got a level of support here at the 200 and 100. You've got a level of support here at the 50. And as the 20-day continues to rise higher, if the 20 breaks above the 50, then a pullback to the 20 might be just the, that we would be looking for that to provide us clues as to maybe we'll bounce and go higher. So, David, that's what I've got on the market. Folks, if you do have questions, there's one question. Does it ever have a range in the 60 to 40? Dorothy, what does what have a range in the 60 to 40? And while she's getting back to me, David, let's switch over to you, man.
Okay.
Okay, you're live.
Okay, thanks a lot, Dennis. Yeah, so our trading plan, we talk about it every week here. We don't chase stocks. We let them come to us. We buy support. We sell resistance, and we do the opposite when shorting. We're just trading what we see, not thinker here. We don't trade for trading's sake. We're not, it's not a contest to see how many trades we can do in a year. It's about performance and risk management and trading a simple system. And our system is buying stocks that pull back in tandem with the indexes. And right now we've had a straight up move off the big low down here. And we're just now finally starting to see some consolidation here, which is right now sideways. We'll find out if it does turn to be a consolidation via price through a lower direction here, as we've outlined in this pink channel here. But for now, we're just sitting here at the highest consolidating, which is very constructive. We have a lot of leading stocks that are doing that as well, that are forming really good patterns. They just need a little bit more chart time to complete their patterns and complete their pullbacks, and they will be very attractive to us. So our watch list is stacked. We're ready to go. We just need a little bit more consolidation here, and then we'll have a lot to work with. So we talk about three things every week too: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. And right now most of the setups are on the long side. Here is Loco, which we featured to our paying subscribers I don't know, about a week ago or so. We took to trade around $35 or so, as it's building a new cup here, and it's been trading in a lateral move here. And now, as of well, let's see, as of right now, it is now starting to peek its head above this green line here, and this is a pattern we call the right side of a cup crossover. When when it consolidates along a low of a cup and then breaks above the green line and starts building the right side of the cup. So that's what we're starting to see now with Loco. So we're up, close to 10% in this position now, and we've got, looks like, more to come. So, and that's kind of what we do. We just feature stocks that are forming nice quality setups. We buy them at support, and we manage the overall trend of them after they trigger the trade, and lock in our gains. So that's what we're doing right now. We're waiting for the markets to continue to pull back a little bit more and complete the setups with all these other stocks that we have on our watch list. And it's a really great time for you to take advantage of our 15-day free trial if you're not already a paying subscriber. You get 15 days free. You get everything our paying subscribers get. There's no credit card or anything. Just give us the email you want the newsletter sent to you, and you'll get everything. We send out newsletters 6 times a week. So each trading day and then one on Sunday. We have technical analysis on the indexes as well as leading stocks. When a stock on our watch list triggers a trade, we send you out a trade trigger alert that we're buying X many shares of X stock at X price. When we're ready to lock in our gains or our stop has been hit, we send that out to you as well. So it's very easy for you to trade in tandem with us. We spend a lot of time in our newsletters educating you on these patterns and how to trade them. So this is an excellent time to get on board here so you can take advantage of all these great setups that are setting up, and will be prepared to profit from them when they start triggering. So it's kind of short and sweet this week, Dennis. It's just really all about getting that pullback to be a little bit more substantial here, so we can really load up here on the long side.
Yeah, roger that, David. I mean, that's one of those things. Like you said, short and sweet. I have had to, as you know, I do trade options, and thankfully over the last about 5+ weeks, I like to sell option premium, and that's what's been, that's basically what I have been trading, and it's been I've had a couple of downside trades that we did okay on, but just there's not been anything huge. It's just jumped right out because of that straight up off the bottom move. And so, hey David, are in the near future, are we considering putting on another combo deal?
Yeah, I think we can do that. I mean, it's definitely a good time because like I said, we've got a lot of really good setups, and I don't know, I'm assuming that you're in the same boat, so yeah. It's a good time to give folks, an additional incentive to come on board with us and start profiting here. Okay, that sounds good. Just keep your eyes open, because we may be doing that in the very near future. And so we're just about ready to start reviewing stocks. Just want to give you a highlight. Here's where the active trend trading system is through the since we've started providing the timing service back on the 1st of June. It has been, like I said, last month, the last day of the month, I had to close a position out that was for a loss, David. So it took me down for a little bit of a loss in October. However, November has started off in an okay way. We demonstrated that we have this demonstration trade going on Tesla, where we're showing people how to do weekly covered calls on it and some strategic options on that. And this week's earnings report worked out excellent on Tesla. And then and then basically the rest of this just says where we're at in the margin account, where we're at in the IRA this far through the year. Last week we received a really good note. We love to get your emails to let us know what's going on with how well you're doing, and the active trend trading. We provide a clear and simple trading system for busy people. We provide training on Wednesday nights, and that training goes into the training video file, and you can always find it online. And some of this training is both in technical analysis. This past week we did a training on
how to find stocks with with great stocks with weekly options. So you could do weekly basically income trades on those, and that was a good session from the emails that I received. So as I said, we provide a clear and simple trading system for busy people so that they can become wise, profitable, and winning traders. One of the things I focus on a lot, David, you know this, is I love to provide training. And that's one of the things that we like to do at the Active Trend Trading. And here's a little bit of everything that's inclusive within the monthly subscription, both the premium and the basic level. And then some people also opt in to get the special trades, which are primarily the option trades. And right now that's included within the premium subscription. So that's about all we have for today too, David. Looks like let me check the time here. We can start taking some stocks here shortly, but I just want to remind everybody, have a great weekend. Keep growing the egg, and as David likes to say, and I like to say also, is remember that cash is a position, and sometime when the market is acting funky, cash is the best place to be. Do you agree, David?
Yeah, absolutely. Like I said, we're not. It's not a contest to see how many trades we can do, and we have to do a trade every day.
Yeah.
We want to do things. We want to run a system that's been very successful for us and for our subscribers. And there's times where we're really busy, and there's other times where cash is the best spot to be. We don't want to force things. We want to buy and short stocks at low risk entry points. And there's, like I said, there's times where we have a lot of that, and there's other times where cash is the lower risk place to be.
Oh, without a doubt. So anyway, for everybody, thanks for joining us this weekend. I will get this recording up, the recorded version of this up on line, and David will also. And then we'll answer some questions. So remember, trade wisely, trade profitably. And one last one, what do you think of this new picture, David? Is that a better profile picture? I don't have a cell phone in my hand.
For you, yes.
Okay. Hey, bless you all, and we're going to take a look at some stock here shortly.